Good morning, folks. Michael Zuber, one rental at a time, back with his friend Dion from Dion Talk. How you doing, sir?
Howdy, Mike. I'm doing great. I'm ready for round 1.5.
I like how you did that. Yes, folks. So we're doing an A-B series. I've never done this on this channel. Let us know how it works. So leave us a comment below. Video one was why why rising interest rates are awesome. And this sister video is going to be why rising rates suck or horrible or whatever you like to call it. We're just showing you can look at the same problem from a different angle. And as always, Dion, we play ping pong. You're the guest. You get to go first. What do you got?
Hopefully I don't steal too much of your thunder, because there was actually an article just printed in Business Insider where you talked about this. But this, I think, with rising interest rates, why they're terrible is, as an investor, it's harder to chase yield by doing things the way we were for the last 2 years. In the last 2 years, it was make an offer quick, sometimes over asking, sometimes waiving contingencies, buyers paying closing costs. Now, finding those yields doesn't happen as quickly. It's easier to find the deal in a different way, but it's not as fast as it was for the last 2 years.
Oh, absolutely. The biggest one for me will just come out swinging is something I talk about in my first book, and it's what saved me in the last crash is affordability. Affordability is a combination of three factors: price, interest rate, and income. And in an environment where interest rates have done something they have never done before, right? Doubling in the span of 115 days, roughly. That crushes affordability. We have seen affordability take leaps and bounds that no one has ever seen. We have seen interest rates double before, but not in 120 days, roughly. So affordability is hurting everyone. And I did some research. I think it was Black Knight reported that 18 million people in the span of 3 months, 90 days, 18 million people that would have gotten a yes answer are now getting a no answer, because again, demand is a two-step function, a willingness and an ability. And because of what rates have done and will likely continue to do, we have lost 18 million people. So rising rates suck. That's just reality.
Well, in the first video, the first thing I talked about was how interest rates benefit people who save, because your savings account with the bank is going to start paying you 1% instead of 0.02%. It's going to impact the same people really negatively, because a lot of those people who are not educated in finances and think saving in a bank is a way to gain wealth are also going to be hit by adjustable rates on things like consumer debt, credit cards that reset off of interest rates. And if they've been carrying a balance and they continue to carry a balance, that's actually going to be harder to keep doing.
Yeah. The next one to think about, again, rising rates, crushing demand, is a lot of the companies that you all work for leverage debt. Some of you all leverage debt to pay the bills, which is overhead, which is not going to be rewarded going forward. So unfortunately, rising debt, rising cost of capital will actually shut the window for some zombie companies. And rising debt, certainly to this level and this speed, is going to cause unemployment to rise. Whether you believe the Fed, it only goes to 4.1, or you believe me and it goes over 6, either way, hundreds of thousands, if not millions of people are going to lose their job. And that's why not only demand is being crushed by rising rates, the other second step in the two-step function of demand is willingness. We are seeing 2, 3, 4 million people that are qualified basically say, no, thank you. We are seeing more people go, you know what? I'll check in 6 months. I have no idea where this crazy economy is going. It looks like it sucks. Recession, stagflation. I don't know. I'm scared. Yes, I could buy, but I'm not signing that $200,000, $300,000, $400,000 mortgage. So again, rising rates is going to lead to higher unemployment, and it's crushing the second step, willingness to buy. So rising rates suck. Let's do one more.
One more, and this is the one that bothers me the most. When interest rates go up, and a lot of content creators have an excuse again to make more crash videos. And my problem with crash videos, for the people who attack me in the comments, I'm not saying they're right or wrong. I'm saying that for 2 years, we've had crash videos saying, here's why you don't take action now. And now we have those same crash videos saying, the crash is coming, so here's why you want to wait and not take action. That's my problem.
Yeah.
When the crash is happening is when you take action. You benefit from this by finding the motivated seller, not waiting 6 months, finding the one now that has to sell, but can't get someone else to buy the property because people aren't looking at all three things of price, rates, and rents. And I think we're going to see more and more crash videos
We
that
are.
get hundreds of thousands of views.
Yeah, we are. Absolutely. So I guess the last thing for me is kind of all encompassing. I've done some research in real estate. The collection of the housing market makes up somewhere between 15 and 18% of our national GDP, probably bigger than most of you thought. And I think what we are seeing, because again, I believe we will have we may have a once in a lifetime crash in transactions, which means that collective GDP is going to probably drop. I said this morning on the daily financial news about 4%, right? It doesn't go to zero. But if we lose 4% of GDP, that's hard to make up in other areas, given that consumer demand and all of those things are crashing. We've already seen big real estate firms, Redfin and I don't know, the other one announced layoffs, more coming. We're already seeing appraisers and home inspectors go, hey, I used to be booked out 3 weeks in advance. Now I'm not even booked out a day. We are seeing this economy crash. And let's not forget that sellers who could sell and get over asking and pocket lots of cash, which is liquidity in the system, that is over, right? FOMO from sellers is really happening. So there's going to be a lot less money in the system. Liquidity is being sucked out of the system faster than people actually expect. M2 money supply is going to go down. We are in for a pretty tough time, pretty unexpected, I think, by most people, how bad of a drag housing is going to be. So that is why rising rates suck. Dion, where can people find you?
Right here on YouTube, Dion Talk Financial Freedom.
Awesome, buddy. Thanks again.